Hey guys, welcome to another Trade Genius podcast. Bob and Phil here, as always. Guys, trouble is brewing in bondland. You know, Moody's dropped the bomb on Friday. Well, we think it's going to segue into something bigger. You're not going to want to miss this. Let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
Okay, Bob. So there's a real conundrum with the Fed. They want the long end of the bond spectrum, the 20s and the 30 years to basically they want yields up on those to help them out. They're not getting that help. And you came up with you found an interesting article that may uncover a massive plan to solve their problem, but it leaves a lot of people holding them back. Can you talk us through it?
Yeah, if you don't know who the sucker is at the table, it's probably going to be you. And IBM, and I found this thing before even the Moody's thing dropped. It kind of blew me away because I grew up in the 70s and 80s when there was a lot of defined benefit plans out there. And IBM is switching from a 401k plan back to a defined benefit plan. And, they're going to do it ostensibly, for certainty of return and cost savings. But really what they're doing here is they're creating a slush fund that IBM and the government could tap into to a lower cost of borrowing. Because if you read this article, they offer a good rate first year, second year, not so good of a guarantee. In the third year, I think there's no guarantee at all. Here's the other thing too. You have a 401k plan, you leave the company, you could cash out or you can flip it to an IRA. These defined benefit plans, look, I was in one with Control Data. You can't touch your money until you're retired, 62, 65, when you fully vest. So they can lock this money in, and basically they're gating you. And they can just stick this money and keep it in a bond fund the whole time. And I can imagine the government knocking on the door of these guys or the pension Department of Labor saying, hey, if you have a defined benefit plan, you need to have X percentage in treasuries to be safe. And the government's going to now be able to tap into this new source of money. It's one thing to be able to try to force every individual investor to buy, treasury bond. That would probably take legislation. It's a whole other thing to grab the woke corporations and tell them that this is what they need to do. And then they just impose it upon all their employees. And the one thing that really will bother me is that if people indeed leave and they can't take their pension or their retirement money with them, they're unsecured creditors, Phil, to IBM. So if IBM goes bust, pension plan goes with it. It's not protected. It's not like a 401k plan. It's not protected. You're an unsecured creditor to IBM at this point. And it's pretty scary stuff. I'll throw it back to you.
Yeah, I mean, if you think about the mountain of debt that has to be deployed here over the next couple of quarters, you're not really the savvy money, the institutional money is not really looking to get into bonds quite yet. And it's a problem for the Fed, but this solves a lot of problems for them. Now, is it healthy for, the worker? No, but, because I think it takes away a lot of options, like you said, and there's a lot of risks with that. But I could certainly see where this would be an elegant solution that really no one's looking at, slowly creeps its way into the system, and then you do get that. Now, it's going to take away from the stock market flows, but, again, that's what the Fed wants. Ultimately, those flows will return when the economy gets back to booming again, but, we're kind of facing this, contraction. We see it in the data. We see it in various parts of the economy. So I think what the Fed is looking at is that eventually they're going to get their slowdown, but they really do need that bond yield or the bond market to be bought. And so I think what we're going to see is, yields spike, like you said, up to that 7% area, maybe more. And then the institutionals will go in there because at that point, they're going to have a nice return locked in for as long as they want. And they can weather out this recession because obviously, stocks just don't do positive returns in a recession. And then going forward, this is more of a long-term solution, right? Is to absorb all of this debt because the debt's out of control. There's no end in sight. I think they're talking about another stopgap to keep the government going. That's supposed to come out over the weekend. And but again, it's just kicking the can down the road. So until you get some comprehensive plan about really curbing the spending in this country, it's not going to stop. And you got global conflicts on the rise too. So that's just going to further add to the debt. So yeah, something like this would help. But ultimately, at the end of the day, we got to get the spending under control in the country. But this is going to fix it for now, I guess.
Yeah, and look, they're not going to get spending under control. They've never, ever done it. So here's the thing. Look, they blew up the real estate speculation, right? Now they're going to force you into the bond thing. Look, at the end of the day, the only entity that's going to be able to spend money is going to be the federal government, and they're just going to basically starve everybody else off. And when we were younger, there was a thing where the government could choke off the private capital. They worked around that for 20 years, but now they're going to be in a situation where the government's going to be the only one that's going to be able to spend money or borrow money, and everybody's now going to be is going to be tapped into federal government. Look, we're getting basically a soft coup of communism, where the federal government really can control politicians and businesses because they're the only ones that can move the money around. So pretty sad event, but for us as traders, you got to start paying attention to this, because I think once they blow this thing up, I could easily see them take $10 trillion out of the stock market, moving into the bond market by more gimmicks like this, Phil.
100%. All right, guys, let us know what you think about all this information. Certainly interesting. Something's going to have to happen with our debt, and this might be one way it goes. So let us know what you think. As always, check out our specials over at tradegenius.co. We have specials. You can get in the room with us. We'll help you navigate these crazy markets. And as always, we thank you for watching. Please hit like and subscribe. We'll see you on the next video. Take care.
Trade Genius.